Ever wondered how trailblazing risk leaders navigate uncertainty with finesse and confidence? Uncover the surprising connections between their personal journey and professional prowess, and get ready to learn and elevate your risk management game with the RiskMasters podcast. Join host Julian Hay in collaboration with Risk.net as they delve into hidden gems of risk leadership through engaging conversations and thought-provoking insights from board directors to chief risk officers and business leaders.
Risk management is not about predicting the future, but about preparing for it. In risk management, we often rely on models, forecasts, and control frameworks to guide decision-making. But what happens when uncertainty is so deep that traditional approaches fail? Today's guest, Roger Spitz, has built his career helping organizations prepare for an unpredictable world. From his early days leading global technology M&A deals to becoming a thought leader in strategic foresight, Roger has worked with CEOs, boards, and investors to navigate deep uncertainty. Now, as a founder of Tech Essential and the Disruptive Future Institute, he advises organizations on building resilience, anticipating systemic disruption, and turning uncertainty into strategic advantage. In this episode, we'll explore why foresight is more powerful than prediction, the difference between risk and deep uncertainty, and how organizations can rethink decision-making in a world where rare events are becoming the norm. This is part 1 of my conversation with Roger. In part 2, we'll go even deeper in practical strategies for integrated foresight into risk management. If you enjoy this episode, please don't forget to like, follow, and leave a review. Your feedback helps us bring more insights from industry leaders. For more resources, show notes, and articles, please visit avitia.com. I'm Julien Hay, and this is RiskMasters. It is my pleasure to welcome Roger Spitz today on RiskMasters. Roger, I think we're going to have plenty of time to talk about your career and especially the connection of your work back to risk management today. But before we get there, I'd like to set a little bit the scene. So can you give us a little bit of flavor about your career? Because you and I actually met and talked a little bit about it before, and you really kind of pivoted a lot in what you've been doing. So can you give us some flavor there?
Yeah, no, thanks, Julian. And thanks so much for having me on the podcast. It's an important one with great intersections with the topics that are dear to me. So indeed, we met in London, and we met at an event at the Institute of Chartered Accountants, which is actually the start of my professional career. So I was brought up in South Africa, but professionally and studies spent a lot of time in the UK, and qualified as a chartered accountant, ACA, with EY, and then moved quickly into investment banking. And in investment banking, I was in mergers and acquisitions. So I was head of M&A covering the technology sector with one of the world's largest investment banks. And so advising externally, not corporate development, advising externally CEOs, boards, and their shareholders on some of their most strategic acquisitions or divestments. And I did that for 20 years. So forward-looking, strategic job, global. And in 2017, our CEO at the time wanted to reinforce our activities in San Francisco and asked me to move from London, where I was covering the sector globally, to move to San Francisco to reinforce both the West Coast M&A activities and also the technology focus from there. And when I moved to San Francisco in 2017, I basically promised myself to go down a rabbit hole, which we'll be unpacking. But that rabbit hole led me a few years later to professionalize in the sense of becoming a full-time, for want of a better word, futurist, but we'll also unpack that. So today I have my own practice, which is a strategic foresight advisory practice called Tech Essential. And I also founded a think tank and executive education platform called the Disruptive Futures Institute. And maybe just 2 words, although we'll probably spend more than that discussing it, on what the primary focus is. The primary focus is to kind of investigate systematically the possible futures to be better future prepared, future intelligent, and build resiliency.
Yeah, and that also one was connection point actually between our discussion today and what you do. And your last book, Disrupt with Impact, which I'm admittedly still reading, but the beginning is very much aligned to things that risk managers, CROs, risk executive, in fact, any executive should really consider in strategy management for their business and organization. And so that connection part is very strong. And I felt that was very interesting for you to talk to our audience today about that, actually, and what foresight actually means. Can I just dive actually on this notion of, you mentioned you're a futurist, so what does that practically mean?
Yeah, so maybe the starting point is to sort of give a perspective of what a futurist does not do. And that goes against the kind of, it's counterintuitive for many people. Basically, a futurist does not predict the future or seek to predict the future. I would even say that if anybody is telling you that they have a sense of the future, that they can predict it, you should probably run a million miles away.
You probably have a super crystal ball that
exactly a SaaS crystal ball subscription model. So therefore,
that could be a nice podcast idea.
I know, right? I know. So the fundamentals for futurists, or I think a reasonable futurist should be that the world is unpredictable. But it's not because it's unpredictable that they aren't tools and almost a necessity to investigate possible futures and to do that in a structured way. They're tools to do that. And the objective is not prediction because it's unpredictable, but preparation. And so for me, a futurist is someone who's deeply interested in the longer term futures, in the next order implications of how things might cascade and evolve, often in unexpected ways, how things that might seem unconnected and unrelated might actually be connected and intersect and create further changes. And the important thing is that while we do try to look at slightly longer term futures, so we're talking more kind of 5, 10, 20 years ahead in terms of understanding the underlying drivers of change and possible plausible scenarios, ultimately we're doing it to inform decision making today with a view of being more futures intelligent, more future prepared, and more resiliency. And so to your point, the intersections with risk and risk management are very important, because I would understand, and from my own background in banking, risk management is really very much informing decision-making around possible outcomes in the future.
It's about managing, not managing, it's about understanding and planning for uncertainty. Mm-hmm. And we're going to come back to some of this notion as we unpack the content of your book, actually, and what you do, because I think that's particularly important for people in the space of what we call strategic risk management, emerging risks. All of those notions are very much connected to the content of what you do. And that anticipation of what does that mean for an organization and a variable they need to be that we as executives need to pay attention to. If I can stay a little bit more on your career, because clearly you've done kind of a massive pivot, right? That some mm-hmm. people try and decide not to do, others clearly you succeeded in doing it. So what's your pricing decision and lesson from your career, and perhaps early career, shapes how you approach leadership and risk management today, and how you got to where you are in that sense?
Yeah, so it's interesting because, like many topics, you have, especially in our complex world, which we'll probably unpack a bit later, we have actually these paradoxes and contradictions and tensions, and we also have different meta levels. You can unpack the Russian dolls in terms of whether it's, as an individual, society, a company, the world. And so I think the early careers shape one, but in sometimes also unexpected ways, because on the spectrum, I was probably very much on the risk-averse side, on the belief that, to take the caricature of the Monty Pythons and accounting, right? I mean, I qualified as an accountant. How more risk-averse can you get, right? And for those who follow Monty Python and some of their most amazing sketches around wanting to be a lion tamer and all that. But effectively, I was on, and probably still am to a degree, on the spectrum of believing that you can contain risk, that you can modelize and manage risk, and you can kind of really control that. And effectively, part of it was qualifying as a chartered accountant, then working in investment banking, then doing all the things which, from a Newtonian mechanical predictable world feel like, you have that degree of certainty and that. And so that worked for many years. And then, funnily enough, I discovered not only a part of myself that I hadn't discovered around being, more comfortable with ambiguity and actually reconciling our own existential being with the need to not have things that are predetermined. In ways, the freedom, agency, and choice, and the opposite, the uncertainty allows us freedom, agency, and choice, and that's better than predetermination. So in many ways, it's very good to have this uncertain environment. But I would say that to answer your question from a career perspective, as I interacted with core stakeholders professionally, clients, and concrete situations of decision making on strategy with CEOs, boards, those kind of C-level decision makers, suddenly you start realizing that there probably isn't a lot of always the answer to the questions being asked, that the questions are probably more important than the answers we think we know, and that things certainly I think in the past decade at least, and more so every day, there's this inverse relationship between predictability and uncertainty. And the more uncertainty, the less predictable. And therefore, the question then becomes not just being comfortable with uncertainty, but how do you leverage on it, make sense of it, and make decisions in what might be a constant environment of deep uncertainty. And so, in a way, by being kind of on the risk averse and appreciating risk, and both from a banking perspective, a personal affinity, I ended up appreciating that was a sort of utopia, that was illusionary, and that wasn't an updated way of managing our world or surviving or staying relevant in our world, whether it's at the individual level, organizational level, or even for society. And that's where I sort of suddenly built a deep interest in uncertainty. And it was primarily also just to stay relevant. What was it for me to stay relevant? Was it the expertise of an M&A advisor and banker over time? Or was it an updated understanding of the way the world really is and where the stakes are? And fortunately for me, I was able to do that in areas which I also found quite interesting, because they bring in social sciences, humanities, philosophy, strategy, you name it. And so I found those very interesting. And then, like many things, serendipity, right? I probably got a bit lucky on the way to be able to be at a time and place and make certain choices which allowed it to resonate and scale.
Firstly, it's about illusion of control, right? And I think, and you touched on some of that in your book as well, that the world is accelerating, and there's been a lot of discussion in the industry, like any other industry, in fact, that are all impacted by that. Because if people don't evolve, they will simply become irrelevant, and very, very quickly, by the pace of change that we're seeing nowadays. And so when you think about the notion of challenge, what was the biggest challenge you had to overcome in your life or in your career?
Yeah, so I mean, there's always different ways of looking at it, right? I think if you put it from a world perspective, it's always going to be difficult to convince the outside world that an investment banker in London is faces any challenges, right? So these are relative and personal concepts and that. But from my perspective, which, as you're asking me as my own perspective, I can give you my perspective. I think the challenges in investment banking, even though they're good jobs and the like, they come from different aspects, which include pressure, which include lack of time. You're in an environment, and it's not unusual for all kinds of jobs. I'm not saying it's any particularly unique, but I'm just talking about from what I know and in relation to the question. But they're typically jobs where you're literally working 6-7 days a week for year in, year out, 100+ hour weeks. And you're often at my level, I was traveling, 4 or 5 days a week at most weeks. And then you have an audience which are very senior, both internally and in terms of the clients, who are making decisions which for them are life-changing. Whether with hindsight they are or not is another matter, but they kind of presented as such and contextualized as life-changing, very strategic decisions for an organization. And so So the stakes are quite high. At the same time, that's an opportunity because you learn to be driven. You learn to tolerate a certain degree of pressure. You learn to manage your health, your body, what you eat, your mental space, and your physical activity, to also manage grueling hours and realize that you can actually do well and succeed. And I would say that even now, when I then move to my next biggest challenge, which is probably moving to the opposite end of the spectrum, where you no longer have structure, where you no longer have demands or salary, where you literally have a blank page, to use the Eastern philosophies and Buddhism idea of Shoshin, being in his mind, and you have that blank page, you have everything to build. And from an existentialist philosophy, it's wonderful because you have freedom, agency, and choice, and nothing is set in stone, nothing is set in anything for that matter. But that also is the angst of existentialism, right? That, the philosophers have, that angst is precisely because of the freedom and choice you have. And that challenge is very significant. But I would say that the initial challenge of the grueling life, and that builds a certain discipline and a certain resourcefulness and a certain stamina, where you're used to having people say no because it's hard to generate M&A deals and to have deals go through. So you're used to challenges, you're used to having people say no, you're used to having people say it's impossible, you're used to kind of doubling up on the work and energy and etc. And that kind of probably helped me with this current challenge of the blank page and building something from nothing and everything I'm trying to do now.
It's for me, it's absolutely spot on. And clearly, I've followed, even though it's a few years later, the same path that you have, and I can see that. I read a very interesting book called What It Takes from Steven Schwarzman, who is the CEO of Blackstone, who explains how he transitioned from being at the top of Lehman Brothers before it went burst into the 80s to creating Blackstone, and how the transition was difficult, actually. And I think it connects to a lot of what you're saying. As a personal challenge and change of path where everything is dependent on you, and the brand disappears overnight because regardless of what you've done before, people don't know you in that new capacity. And on top of that, for you, you changed actually as well, field a little bit. So that must have been definitely a big challenge. And with that, can you just elaborate a little bit on, okay, what does that practically mean day in and out? What do you do? What do you spend your time on nowadays, obviously?
Yeah, so it's good and interesting that you added the nowadays, because there's the kind of transition phase, and one's always transitioning and everything is new, but then there's the nowadays where I would say I have more of a run rate and more established, and that doesn't mean more uncertainty or more certainty, but the nowadays is different from the transition. The transition, even though it wasn't your question, I'll just give one or two elements. I think the transition probably involved more prototyping and trial and error, because when everything is new, you can go in any direction. So even if you sort of say, oh, I'm going to write a book, or I'm going to do whatever, you still need a brand for your company. You still need to see which ideas resonate, in what format and that. So I would say there was a multiple number of initiatives which were basically testing ideas, testing legitimacy, testing what resonated in what form, with whom, which, effectively you become a kind of startup, right? And that kind of creates feedback loop and emergence, and certain things you can amplify that seem to be working and dampen. And that's effectively the sense-making and decision-making in complex, unpredictable, emergent environments, right? And we can talk about that. So that kind of discovery process entailed, I would say, 100% of my time for a few years, even before I decided to leave investment banking, because I was already prototyping. It was just 15 or 20% of my time instead of 100% of my time. Then it became 100% of my time. So that was a sort of very key part of my life, and it still is, but it just not 100% of my time. It had moved to, Then to answer your question as to nowadays, maybe the simplest thing is if I can, give you a snapshot over the past few weeks and next few weeks of the sort of thing one does. So I am for profit. So if I don't make money, it's not intentional. So I'm for profit.
Aren't we all?
So the key thing is, paid activities. Where does the revenue come from to continue to invest and build? It doesn't mean that I don't have activities that are pro bono and things that I care deeply about that are not paid, but to feed that, research, building a platform, building a voice, a multiply effect for the right causes, and that you do also need to be sustainable, economically. So a part of that is keynote speaking, both the marketing of them and giving keynote talks, and that's going very well on the back of the book. And 2024 was a record year, and 2025 is looking equally nice for now. The talks are often on the back of concrete real world case studies and content for me. So I don't like to just regurgitate the same stuff as the next investment bank. I mean, no one cares that I'm a next whatever, So I really am constantly looking at new case studies, new advisory work that can feed into executive education and talks. One of the projects I've been on for the past few months, which is very, very exciting for me, which feeds in very much with this idea of, we talked about foresight and futures intelligence, but there's a corollary to that, which is systems change and driving transformational change, and which is also part of our activity. And one of the projects I've been on in climate foresight is in Brazil, where I'm working with a company. I'm on their board, and I'm on the, I work with them quite considerably, called Lux Carbon Standard, which is the first carbon credit certifier in Brazil. And instead of thinking just, okay, let's try and increase the reputation and the integrity of carbon standard certifications and do it for our company or just for Brazil, they have the ambitious perspective of trying to transform the carbon markets. And when you think about systems change and the levers you have, there are sometimes certain things that don't seem to necessarily require a crazy amount of human or financial capital, but can have very significant influence and multiply effects in terms of driving change through complex systems. And so they've been kind of using me as, on their board for ancestry governance, for foresight, and long story short, we've been working for 2 years with them. And last week, Brazil put through legislation around carbon credits, and which are very much in the direction of Lux CS and the work we've been doing. And a lot of it is from initiatives we've been taking and that will result in probably higher integrity at the legal level and for the different stakeholders. And probably people will look at Brazil and it will be harder to kind of go back. So these kind of initiatives, it's a combination of advisory, it's a combination of speaking, it's a case study which we then develop in our executive education programs. And just to give you, again, a concrete example from the advisory side and the board side, or you could even call it policy and lobbying to a degree, we're launching early in 2025 the Disruptive Future Institute Sustainability and Climate Academy, where we'll be giving executive education and programs on sustainable futures using climate foresight and decarbonization strategies. And some of the core programs, parts of the program will be real world case studies such as Lux Carbon Standards and other clients. And our first chapter will be in Brazil. So if I take a step back to wrap your question, what do I do on a day-to-day? There's an element which is content, because we're writing articles, blogs, there's an element which is, I don't know if it's the right word, but thought leadership or advisory, where we're thinking about, next year, 2 years ahead, what should we be doing? What should we anticipate? And what do we want to drive? Because it's precisely because things are not defined and determined that we have scope to drive change, and not everything is always negative. Some of it is building an executive program. So these are courses, we'll be launching. And so these are some of the activities, but thematically, it's always around futures intelligence, foresight, and building resiliency and driving transformational change. And then it takes the form of content, either in terms of articles or books or executive education. And then there's the advisory part, which is kind of real world case studies, which inform the content so that you're always up to date with real world concrete situations that involve strategic foresight, that involve transformational change, so that it's relevant, concrete, relatable, practical, and up to date.
And how do you see the connection of foresight back to risk management in that context?
So that's a very, very, very important question. And I'm gonna kind of just make a small distinction before answering it. But I think I found it useful once the penny dropped for me, and it was my aha moment a few years ago. This distinction allowed me to form a point of view around your question, which is, how do you see the linkage between risk management and foresight? And the distinction is the one between risk, uncertainty, and deep uncertainty, or radical uncertainty. And basically, if you think about risk, and most of your readers, your audience, will have a good sense of risk. That's their job, right? And I think the thing about risk is that, number one, it operates in a linear, predictable environment, right? What we'll call complicated. So things are predictable to a degree, things are linear. You know in advance, ex ante, what the outcome would be of a particular course of action. It's you can rely on specialists. There's a range of right answers. It's what you call known unknowns. And there is an answer that can be established, okay? And effectively, there are a number of parameters. Those parameters can be probabilized, and it's a roll of the dice to a degree, but it's, if you drive at a certain speed, the risk of having an accident, if you smoke X cigarettes, the risk, So this is a stable, linear, predictable world where you have a number of parameters that can be probabilized. Uncertainty has elements of that. The future possible states. So as possibilities, will China become the number one economy? Will country A invade country B? Will we discover whatever? So you know those possible futures. You can enumerate them. You might not be able to probabilize every aspect of them, but there are answers to them, and you can enumerate them, and that's kind of uncertainty. You're not sure whether China will be number one. You're not sure who will be elected. But you have a sense of those possibilities and outcomes for the future. Now, deep uncertainty or radical uncertainty, as former Bank of England Governor Mervyn Kay wrote in his book Radical Uncertainty, which is foundational for these topics as well, although he comes from it from a economics and perspective. But deep uncertainty is you don't necessarily know the future states because there are many. There's not necessarily an agreement on what they are. They interact in ways where even if you look at them separately, which is often the case for risk, the way they interact creates then additional possibilities. And you're not necessarily, even if you agreed on them, you wouldn't necessarily agree on how to mitigate for them or what the implications of these future states are. And you certainly can't probabilize them because you can't even enumerate them. You don't even know how they interact and what else they create. You can't put a probability on them. You can't put a hierarchy on them. You don't know what they might look like or what to do about them to mitigate. And this is, the precise impact of climate change. Which regions might be underwater when? What kind of mass migration might arise from which climatic events for which regions? When? 100 million people, 50, a billion? What time horizons? Which regions? Will you work and live in space? Will there be singularity or artificial general intelligence or artificial superintelligence where computers can think, process like a human or even like a collection of humans or beyond that? And once, longevity, will you live till 200, 150, 120? Once you put all of these together, it's deeply uncertain. And I think a lot of the features of the deep uncertainty is that it's complex. So we're contrasting that to complicated, where it's nonlinear, unpredictable, unknown unknowns. And you don't necessarily know ex ante what the outcome of a specific course of action might be ex post. So it's emergent. And so suddenly it's all these uncertainties, cumulative, but also just simply, even if you just take one isolated thing, take the Amazon, think about if you want to move a road in the Amazon or river or build a village. There's so many different drivers in flux, constantly interacting, that are kind of changing. You just don't know what the effect of that is. So coming back to your question now around the linkage between risk and foresight, I think risk is an essential profession and evaluation for these individual discrete situations where you have a known number of variables which can be probabilized. And I think in those contexts, risk is absolutely essential, and the world depends on us being able to have some appreciation and evaluation and mitigation for risks, including economically and through insurance and what have you. Now, the challenge is that if you don't have an understanding of the variables, there's multiple unknowns, there's a broad set of possibilities, there are not necessarily any right answers. These uncertainties prevent prediction and prevent the things that kind of allow you probabilization. And so there you need foresight. You need to realize that you can't bet on a specific outcome anymore. You need to appreciate that there's a broader set of plausible scenarios. You're not talking about, you're still within the spectrum of plausibility, but that those are not necessarily determined. And so the mode for that with foresight is that you're not worried about relying on a specific outcome. You're worried about thinking of a broad set of scenarios, not from a predictive perspective, but from a preparation perspective. And so you want to build resiliency in systems for those possible scenarios. The mere fact of seeing the world differently in a broader, less determinate way will probably make you prepare differently and will probably allow mitigation differently. And the final comment I would make in these distinctions, which is a very important word, is the word of asymmetry. Because in the risk environment, you can modelize risk and probabilize it. And if it's a 1% risk, you can take a view, etc. The consideration with asymmetry, which is effectively part and parcel of nonlinearity or complexity for that matter. But to use the word specifically, because it might resonate, in a different way with different people, the point of asymmetry is that the outcomes are disproportionate to the inputs. And that can be positive as well for great events or initiatives or great ideas, but it can also be very dangerous. So you can't just sort of say, it's a 0.1% risk, because that risk can be existential. And so the connection for me between risk and foresight is, and I recently gave a talk at AXA on the future of in the insurance industry, AXA at the headquarters in Paris, incidentally. And we were discussing some of these things. And the question is, what does it look like with systemic disruption, with systemic where change is a constant and they interact and create different changes? How do you then adapt risk decision-making in that systemic world where we're more on the spectrum probably of deep uncertainty than risk?
It's a little bit the butterfly effect, right? And I was actually opening your book because I thought I remembered you had used the SVB example, and I think it's a perfect example, illustration of that, right? Where the bank run was precipitated by social media, and within hours, in a way that had never been seen before, the bank ran out of cash in a completely self-fulfilling prophecy. So it's, for me, there's a lot to ponder on what you just said, and the connection I'm seeing, and you touched on that, all a spectrum of scenario testing, for example, which is embedded into risk management, especially when it comes to strategy setting, should build on what you outline, in fact, what you have also in your book, because that environment, that complex environment, unpredictable, deep unpredictability, is absolutely relevant to the purpose of what that practice does. I know we are not there yet as a discipline. I would invite all risk managers to read at least the first 2 chapters of your book, because you already lay out some of those points very clearly in a way that scenarios should be considered and how they should be approached from a strategic standpoint and strategy setting.
That's where we'll wrap up part 1 of my conversation with Roger Spitz. Stay tuned for part 2 in episode 13, where we dive even deeper into foresight and resilience in risk management. Thank you for tuning in into this episode of RiskMasters. I hope you found today's conversation with Roger Spitz insightful and thought-provoking. From understanding the limits of traditional risk models to exploring how foresight can help organizations navigate deep uncertainty, Roger has shared powerful strategies for rethinking risk management in an unpredictable world. This was just part 1 of our discussion. In part 2, we'll dive deeper into the practical application of foresight, scenario planning, and how leaders can build resilience in complex environments. So stay tuned for episode 13, where we continue this important conversation. If you enjoyed this episode, please take a moment to like, follow, and leave a review. Your feedback helps us continue bringing you top insights from industry leaders. For show notes, additional resources, and related articles, please visit avtl.com. Stay connected and join us next time for more conversations on risk management, leadership, and resilience. And remember, embrace uncertainty, build resilience, and keep shaping the future of risk management. Until the next time, I'm Julien A, and this has been RiskMasters.
Thank you for joining us on RiskMasters today. If you're ready to master risk and unleash your full potential, here's how you can take the next steps. First, head over to julianhay.com to discover even more valuable insights from our RiskMasters. We've got a treasure trove of knowledge waiting for you. Second, don't miss out on future episodes. Hit that subscribe button on your favorite podcasting platform. Stay tuned for fascinating discussions on risk management. And third, if you found today's episode valuable, please share it on social media. Help others discover the world of RiskMasters and embark on their journey of risk mastery. Remember, success favors the bold. See you on the next episode of RiskMasters.